In this presentation, we will take a look at part 16 of our comprehensive partnership problem, this time looking at an M-1 adjustment related to tax-exempt interest. Here is our Form 1065. We're going to go on down to the last page, which is going to be page 5. Consider if we are in balance before we make the adjustment. We are in balance, so now we're going to go forward with the adjustment. If we go back to our Excel worksheet, then you'll recall we left off on our interest income. We had interest income, part of it being investment income, part of it being tax exempt. So this is the part that's left, the $2,250, that is going to be tax exempt, which is what we will be dealing with this time. If I go back to the tax return, you'll recall last time when we dealt with interest, we had the interest income as a Schedule K. Now we're going to look at that tax exempt interest, which we're going to go to page 5 now, moving down to the M-1 adjustment. So that's going to be down here on the tax exempt interest. Let's go ahead and post it on the tax return. That's going to be just basically a journal entry. We're going to repost it here on the M-1. The other side, we're going to remove where we put the interest. You'll recall if we go back to the details and go to the income, let's recall this, and go in here, and we're going to say that we had income that was reported, that we put it all into basically this other income, and that was at the $3,750. We removed part of it, that $1,500, and now we're going to be removing the rest. That was in our Schedule K adjustment. Now we're having an M-1 adjustment. All right, so let's do that. We're going to go back to the forms. We're going to put the adjustment here in the tax exempt interest. I'm going to jump to that screen, and the amount is going to be for the $2,250. So we're going to say this is going to be the 2250. Let's go back to the forms, see what happened there. What did that do? What did that do to us? Well, we got that. That looks right. So that's where we wanted it. Did it throw us out of balance? It did throw us out of balance. That's what we would expect until we record the other side. Let's do that now. Going back to the detail. We're going to then go to the income. Going to scroll down to the other income. I'm going to scroll to the bottom. This is going to be an M-1 adjustment. So this is going to be an M-1. And it was for the amount of 2250, negative 2250. This will net out the rest of that interest income, which we had previously had at the 1.5. Now we have these two. So those two are matching up to basically negate this net income number. So we see both sides of the transaction. That brings this other income section down to 0. If we then go back to our forms, and we can then see that we are back in balance. So back in balance, that's good. Now we want to record it in Excel and see if we can double check the income numbers. So we want to see it more transparently in Excel with an actual journal entry. Take a look at those income numbers. So we're going to go back over here. I'm going to say this is a tax journal entry. When I put a T, that means tax journal entry as opposed to adjusting journal entry. We're not dealing with adjusting journal entries here, but if you had a situation where you might have both tax and adjusting journal entries. So I'm going to say this is going to be a new note, and this is going to be an M-1 for tax exempt interest. So M-1 for the tax exempt interest. We're going to be crediting or debiting the interest income. It's a credit balance. We needed to make it go down to 0. So I'm going to say this is the interest income. Then the other side is going to be an M-1 adjustment related to the interest. So we have the interest income exempt for, that's going to be the M-1, and the amount is going to be for the amount that is remaining. That is the $2,250. That's the debit and the credit. Let's post this out, see what happens. We're going to post this first. Here's going to be the interest income. I'm going to double click on it, go to the end of it, say plus, then point to that $2,250 and enter, making it go down to 0. Then we're at the interest income for the M-1 adjustment. So that's going to be the interest income exempt. We're in Q44 where we will say equals and scroll up to that credit. And there's the credit. So there we have that. Now we're back in balance down below. Our original number for net income remains the same. We have adjusted our tax number down here, which we can see because it's not including those bottom line items. So let's see if we can line these up to the tax return numbers. Back to the tax return, back to page 1. Page 1, tax income, bottom line number, 287,000. Back to our number over here, 287,000. So that looks good. Let's go back to the tax return. We're going to go to page 4, and let's take a look at our Schedule K. where we had, pulling up the trusty calculator, we had the 287,000 plus the 1500 plus the 750 plus the 1350, and then minus the 5,000 gives us the 285,600. So there's the 285,600. That's going to be the 285,600, which is this number on the first page, plus the Schedule K adjustments, which are the items in blue. So there we have that. And then we're going to go back to our not our 1040, our tax return. And we're going to go to page 5, still in balance. That's good. Beginning number, book balance, 355,278. That's our beginning number here, 355,278. That looks good. Ending numbers at the 285,600. Ending number at the 285,600. Now this is our two-step method to get to that 285,600. We had our book value to get to basically the Schedule K or first page value, and then to the tax return, and then we can get to the 285,600 with the Schedule K stuff. If you want to go there directly the way it's shown on the M1, then we have the adjustments we had before. Here's our book number, adjustments we had before. Now we have this other M1 adjustment, which I'm just going to pull from up here. I got to say negative of that number. And there we have it. So we're summing up these. So the credit or negative, plus, if you sum those up, that'll match up our 285 and the 285, which matches the 285 that's on 285,600 that's on the tax return.